Once again, you're very welcome to today's webinar. Today, we're going to talk about the euro. And this is quite interesting to me as well as the team because if we claim to trade currencies, it's important that we understand each and every one of them, the characteristics, the major drivers, the factors around these assets so that we can better position ourselves in the future to benefit from the changes in price of these assets. Don't forget that the team HFM runs webinars like this every Friday. Usually we run it every Friday around this time, 12 thereabout. We have a timeout, an hour timeout to talk about different topics, different things, ranging from fundamental analysis, asset classes, ranging to technical analysis, different financial asset strategies, risk management, and then on and on and on and on. We go to make sure that our clients understand exactly what to do, are consistently improving, making the best of opportunities, and getting better every day. All right, like I said, my name is Heritage Adisa, and I'll be with us today. Now, the euro. Before I go further, I'd like to hear from you, right? Very quickly, I believe that some of us here have been trading before now, right? What do you know about trading the euro, right? What do you, just anything at all that you could, muster? What do you know about trading the euro? Do you trade the euro pairs? Is it something that you like and enjoy trading? Is there anything particular any particular facts that you know about this said currency, the euro? So we just start on that note and then we take it, up from there. Anybody wants to share, the euro, what do you know about it? Or, do you trade it? Anything at all that can just get us going. I see a question from Mr. David. I'll attend to this shortly. Anybody wants to share with us? Because, you look at the euro itself, it's the second most traded currency in the markets, right? Just behind the US dollar. And it's a quite important part of what we do as traders every day because, when you look at, major bouts of liquidity, you have it in that space. It's used by about 27 member nations, right? A whole lot of countries use it. The European Central Bank is one of the major central banks as well around the world. Of course, their policy affects up to 27 countries, right? The Eurozone is a major part of the global economy as well. So, of course, international trade, all of these things, affect it. And then in recent time, a lot of the geopolitical drama we've had have involved the Eurozone one way or the other, right? The Russia-Ukraine conflict, you have that. The Brexit drama, you have that as well. And then there's many more in that sense, right? So we're going to get into them shortly. Just please hear from you. Now, Mr. Ibrahim says the euro is the currency of the entire European peninsula and is affected by the European economy. Thank you very much. News from the European Central Bank majorly affects the euro as a currency. Now, that's very correct. Thank you very much. Let's quickly delve right into this and then we can get started. Now, I think I have a script where I put down some information. Let's quickly share that. All right, now, trading the euro. Now, most of these major currencies have nicknames. I think I've mentioned this before. I mentioned for the dollar, you could hear it called the buck. You could hear it called the greenback. The euro is nicknamed the single currency, right? You have the pound, right? You have it named the sterling, the Australian dollar, the Aussie, the New Zealand dollar, the Kiwi, the Canadian dollar, the Lonia, and so on and so forth, right? Now, for the euro, it's called the single currency because we have a lot of member nations using this one particular currency, right? A lot of countries in the Eurozone, right, using this one particular, not all of them, but a lot of them using this particular currency. Now, the euro is a single currency used throughout the European Union, right? And not just one fact I also learned recently is we have other countries that are not in the Eurozone also using the euro. Very interesting fact. I think about two of them. I've forgotten the names now, but then you have that. Now, one peculiarity about the Eurozone is because you have many member nations using this particular currency, right? And they have just one monetary authority, that is one major central bank, the European Central Bank. Now, of course, you have central banks in Germany, central banks in France, but these are like sub-central banks of the major central bank, right? It's just the way in the US too, you have, central bank presidents in different states, but then they all come together under the Federal Reserve. So it's a very similar story here in the Eurozone. Now, of course, they have one monetary policy, authority, one central bank president overall. Currently is Christine Lagarde, right? So you have that. Of course, their policy about interest rate is one for the entire region. But the truth now is because they're different countries in that space, they don't all have the same economic performance, the same, economic development, the same economic troubles, right? One policy may not necessarily be the easiest or the smoothest to run across all those countries. I'll give you an example. A country like Italy has a, bigger debt problem compared to something like Germany, right? So of course, one interest rate decision would affect both countries differently. So it makes the monetary policy of the Eurozone a little bit more complicated compared to simple economies like the Australian economy. It's just one economy, right? The Canadian economy is just one economy, right? So it's a bit more complicated because you have to consider Italy, you have to consider France, you have to consider Spain, Germany, many other countries like that. Consider all of them and then make a decision that favors all of them best, or find ways to ease or ease the effect, the negative effect that it could have on one country compared to another. So that's one major factor you want to pay attention to, that when you trade the euro and you look at the central bank decisions, it affects all of them sometimes differently. And the European Central Bank pays attention to this in terms of making decisions, pays attention to this in terms of their policies. And then you hear things like, debt fragmentation, ways to see how they can ease the negative effects that their decisions on the monetary policy side could have on some of the member nations. But then that's just one fact you want to put at the back of your mind. Now, of course, it's a popularly traded asset. It is very, very liquid. One of the most popularly traded instruments in the market, right? Currency pairs in the market is the Euro USD pair. As a single currency, is the second most traded currency. So, of course, it's extremely liquid. The trading cost around the euro is much smaller, right, compared to a lot of other pairs, right? And then when it comes to the class it falls under, either risk assets or safe asset. Now, this is a very, very interesting part. Now, of course, we classify it under the high beta currencies. But of course, it's not anything like the Australian dollar. It's not anything like the Canadian dollar. It's not anything like the New Zealand dollar. If we're going to arrange the high beta currencies, right, in order of the betas, right, that is how much they respond to risk development or to market conditions. Because I personally would put the AUD first. I mean, it's usually the most sensitive to developments in China, global economy, the equity market, usually the most sensitive. I'll put the New Zealand dollar follows. So when we talk about the one that is the most high beta, that has the highest beta, that moves up the most when it comes to risk on a very general level, I put the AUD first. I put the NZD follow. I put the CAD. Then I put the British pound. You see, the euro is going to sit at the bottom of that. It's the closest to the safe havens. And someone else would even argue that the euro has safe haven capacities as well. And it's difficult to argue against that because sometimes when you have a very negative market condition, the euro could also, do much better than the likes of AUD, NZD, CAD, even the British pound. That's one thing you must have at the back of your mind. Now, we will not classify it as a major safe haven asset, but of course, it also has some similarities. It is also a reserve currency in that sense. Of course, the major global world reserve currency is the US dollar, but a lot of central banks also keep the euro as part of their reserve. So it also has that, major, role to play when it comes to the global economy, right? And then I put here that the risk premium is medium. That is, when it comes to a high beta, safe haven, it's somewhere in the middle there. So it's not always as excited about positive developments, just when you have AUD and NZD. It's not always as excited when you have negative developments, like you have the JPY, the Swiss franc. So it's somewhere in the middle, very close to the British pound and the US dollar as well in that sense. Now, of all the European economies, there are different economies. And you want to think about it that economic data affects the currencies. But if we have about 27 member nations sharing the currency, maybe even more, which economy, right, drives or affects or influences the currency most? Because we have data for Germany, we have data for Spain, we have data for France, and then we usually have data for the whole Eurozone. But the interesting part is the data for the whole Eurozone comes out mostly after that of Germany, after that of France. But because Germany is the largest, the biggest economy in the Eurozone, once you have the data for Germany, you pretty much know what's up or what's going on in the Eurozone. So the way you look at Australia data to trade the Australian dollar, and for Euro, looking at the German data is a very, very, very influential or very good way to do this. Just speaking, Germany and France alone, those two countries make up about 40% of the total GDP out of the Eurozone. So, of course, data relating to GDP growth, unemployment, PMIs relating to Germany has a very big influence on the euro as a currency. When you have positive data out for the Eurozone, for Germany rather, we can expect the euro to appreciate on the back of that. Right? When you have, German data coming negative, of course, you expect the euro to depreciate on the back of that as well. So that is one of the major things that, we want to also pay a lot of attention to, right? It also helps us as traders to also make the most in terms of our decisions, helps us to, make decisions, helps us to know what to do with the said currency as we trade. Remember, we're talking about the euro. And then the reason why I'm talking about the euro is it helps us as traders by knowing what is going on or what affects a certain currency. It can help us also factor in the new developments as it happens. And when you know the new developments as it happens, of course, it can also help you make decisions, right? I like this question. I'm going to answer it very quickly. It says, geographically, UK falls within Europe. Yeah, but currency-wise, do we count them out of the Eurozone? Now, yes, the UK does not. Not all countries in the Eurozone spend the euro. Switzerland is an example. The currency spent in Switzerland is Swiss franc. It's not the euro, right? And I'm sure there are other ones too as well. Now, in the UK, of course, it's the British pound. And before now, the UK was part of the Eurozone. Before now. I think it was I can't remember the year now, maybe 20, is it 20? I can't remember 20, recently, maybe about 2017, 18, 19, within that little space of years. I can't remember the exact year now. That was when we had the UK pull out Brexit, right? So we had that. I can't remember the year, and I think it's close. It can't be 27. 27 is pretty far. Maybe around 2019, thereabout. I think it's closer to that. We could check maybe after now. But, that's when we had UK pull out. So economically, right, the UK is no longer part of the Eurozone, right? Of course, geographically, it's in Europe. There's no doubt about that. But now it's no longer part. So it's not all the countries in the Eurozone that spend the euro as a currency, right? I mentioned two already. But of course, we have to look at the euro in itself and the member nations in that space. I hope that makes sense. All right, now, moving on. I said, when it comes to trading the euro, we must pay attention to German data. We must pay attention to French data as well. Another thing we want to also look out for is the dollar index. What is the relationship between the euro and the US dollar? Trading the euro and the dollar index as an asset. What is the relationship? Now, the dollar index, of course, is an index that measures the relative strength of the US dollar, compared to other currencies. These other currencies include the euro, includes the yen, and so many other currencies like that. Now, of every currency weighted in that index, the euro accounts for over 50%, about 57% of the weighting of the dollar index is the euro. So that means that whatever happens to the euro affects the dollar index the other way. If we have euro moving higher, it has an inverse relationship with the dollar index. That is, when we have factors that strengthen the euro, we can expect the dollar index to fall. When we have factors that strengthen the dollar, by extension, the index, we can expect a pair like Euro USD to go down. So we have that inverse relationship between Euro USD as a currency pair and the dollar index. When Euro USD is moving higher, the dollar index is moving lower. When Euro USD is moving lower, the dollar index is moving higher. So that's quite interesting that you want to also pay attention to when you look at correlations. Now, of course, like all correlations, it's not perfect. We cannot always have it 100% like that all the time. But of course, there are times when you have the dollar index, not moving exactly like that, or having an direct inverse relationship fully or by the same amount of, pips in that sense with the Euro USD pair. But of course, it's a major correlation that you want to pay attention to. Now, of course, when you look at the little facts that I've mentioned, we're going to go into, what to do with the euro right now, whether we're buying it, whether we're bullish on it, whether we're bearish on it. But I want to talk about some key factors that influence the euro. Like every other currency, economic data affects a currency. Monetary and fiscal policies affect a currency. Geopolitics and political events affect a currency. Of course, demand and supply, and in some cases, commodities also affect the currency. Now, the euro is not a commodity currency, so that means that it's not directly linked to commodity prices. But of course, interest rates and monetary policies are major, one of the biggest drivers for the currency. And I mentioned the monetary authority for the euro as a currency is the European Central Bank. Whatever they're doing with interest rates, whatever they're doing with their monetary policies has a big role to play in what traders do to the euro. If the European Central Bank are more focused on tightening their monetary policies, that is, reducing money supply by whatever means, expect the value of the currency to rise. But in a case where you have, the central bank being more dovish about their policies, being more, loose about their policies, looking to pump money to the economy because the economy has suffered heavily or because we're having slowdown in economic growth, right? That in itself has a negative effect on the value of the currency. So when central banks are more hawkish, the currency tends to appreciate. When central banks are more dovish, the currency tends to depreciate. Right? So that's one thing you want to put at the back of your mind. Now, not just that, because yes, you could talk about, the economic, the central bank decisions. We had their meeting, I think it was even yesterday. The European Central Bank had another meeting, right? And these meetings usually run, it depends on the central bank. For some of them is every month. I think Australia now is every month, barring January or so. Right, one of those commodity currencies have it almost every month. But some of them is every 6 weeks. For some of them is every 2 months. Right, so it depends on the central bank. But the one for this month held yesterday for the European Central Bank. And the meeting, they basically didn't change much of the recent language. They kept saying the same things that, the economy, yes, it's moving in the direction that we want it to go, right? And then we need to cut interest. In fact, not just we need to, they cut interest rate by about 0.25%. That's the main refinancing rate. They cut it by 0.25%. That's what we expected as a market in general. So it's something that we knew was coming, and it happened exactly like that, right? They also said, oh, they didn't commit to, cutting interest rates, very, very, very urgently going forward, which was a positive in itself for the currency, right? And then they basically didn't say much. They didn't change much. They didn't change much in terms of their language. They kept saying that, look, going forward, we're going to look at how the economy performs. And based on how the economy performs, we will decide on what we're going to do with interest rates. So, not much of a surprise. The currency actually appreciated after the meeting against most of the other major currencies, right? Pounds, Switzerland franc, the euro, the US dollar rather, right? We had it appreciate in that space, right? Of course, against the AUD and NZ, it didn't do as much. We're still going to go to the chart where I will show you these things, but I'm just mentioning it ahead so you understand what I'm saying. So there's that part. Now, that is an example of, what interest rates or central bank monetary policies can do to the value of the currency. Aside from the interest rate, we already mentioned that economic indicators are one to watch, most especially the German data. Whatever is going on with Germany has a major, major, major influence on the currency, right? So we mentioned that as well. GDP growth, unemployment, inflation, right? PMIs, whatever the data is, it also has a major role to play when you talk about trading the euro. So that means that when you have data come out, it comes out positive, mostly by larger margins. You expect that currency to appreciate, in this case, the euro. So when you have data like the German data coming more negative, right, you expect it to weaken the value of the currency. So there's also that as well. I hope this makes sense. And we also mentioned political events. Now, political events, so many of them, right? Russia and Ukraine, that's a major one, for example. And the reason why this is very significant is the Eurozone has a lot of energy dependence on Russia. So when you had the whole Russia-Ukraine conflict and sanctions here and there from the West, from Europe, from the US, from Canada and the likes, of course, it also had a major, major, major influence on the euro as a currency. The more the war and the sanctions got worse, the weaker the euro became, right? The more inflation became a problem in the eurozone, because don't forget that energy contributes a lot to how prices increase. We're in Nigeria for most of us, and we know what happened or what is happening to the price of goods and services generally just after the subsidy removal and the increase in the price of PMS or petrol. So, I mean, look at it on a larger scale, on a global scale as well. And then the same thing happened. It happened in the UK as well. It also affected euro as well. So geopolitical development, right? It could be Brexit. And during the time of Brexit, we had a lot of drama, even relating to the euro. Yes, it affected the pound the most, but it affected the euro as well, right? The whole, election problems as well. I think recently we also had elections in, can I remember now? Let me see if I can remember. It's not France. I think it was, I'm trying to remember now. We had elections recently in the Eurozone. Yeah, I think it was France. I think it was France for the for the House, the National Assembly, as we will call it here in Nigeria. We had that. Oh, the whole UK, and now UK is out of this. But when UK was still very much part of this, all the whole changing of prime ministers also had some spillover effect. Don't forget that, the UK and Eurozone are still major trading partners. So all of these things also have their role to play, right? When you have conflicts, when you have disagreements, trade wars, whatever the case is, that has, just massive, massive implications. It affects the euro negatively and increases the volatility when you trade a currency like the euro. I hope this makes sense. I hope you're following me. So, I mean, when you're trying to trade the euro, certain things you want to consider are, number one, German data, right? What happens with Germany, with data, with the economy, and of course, by extension, the entire Eurozone data. That has a major role to play. We also have geopolitical developments, things like I mentioned Brexit, I mentioned Russia, Ukraine, all these things also have their role to play, right? You have, individual development, Italy's debt crisis, all of those things, has its role to play. I mentioned monetary policies like interest rates determined by the European Central Bank. This also has its role to play, and so many more. Now, let's go to the main parts of today's webinar because we're traders. In as much as we must establish the background story as it relates to trading the euro, we also need to know what we're currently doing with it. What are we doing with the euro as a currency? Right now, are we buying the euro or we're selling the euro? What is the current development around the euro? How has it been trending? Has it been moving higher or lower? What should we be doing with the euro going forward? These are questions we want to answer in our webinar. Now, if you're here and you're totally new, let's say you learned about this webinar on social media, be it Facebook or Instagram, and then you decided, oh, you want to join. You're new to trading, but you have no much information about how trading works and all of that, right? Please, I invite you to join me in the foundation course with HFM. What we do is every morning, every week rather, Mondays to Wednesdays mostly, we have the foundation course that runs around 3 p.m. It's designed to lay the foundation for everybody looking to get started in trading CFDs. Right? It has that. Now, join that. All you need to do is, if you do not have an account with HFM, all you need to do is register for one. You can download our mobile app from your Play Store or your Apple Store. Just simply search HFM, right? On your Play Store, your Apple Store, you'll be able to download it. You can do that. Alternatively, you can also go to our website www.hfm.com. That would also get you to register. When you register, you're given a HFID, you're given an account, right? And then you get assigned an account manager who can also guide you, get you started, join you to the trainings and all of that. And then you can get started. It's important that you have the background information about what trading is about, how it works, where you start from, how to use the trading platform, and all of those things. It's important that you have that information so that you can get going. And what we're saying makes a lot more sense to you. I hope that makes sense, right? For those of us that have been trading before now, of course, you already have most likely been through the foundation course. You have your account manager as well. And then what I'm saying, you can relate. Now, we're saying these things because in your daily trading, if you have, a trade idea that involves a currency like the euro, for example, it makes sense. It becomes easier for you to deal with it. In the past, we've done webinars about trading the dollar and the dollar index. I've done webinars about trading the Australian dollar, I guess. We've done webinars like that in the past, and it's all posted on our YouTube handle, HFM Nigeria. So you can as well just go catch up with these videos so that you can, get more information about the assets you're dealing with and you're better able to navigate. So that being said, how do we trade the euro? Right? Trading the euro now, let's see if we can adjust this. Trading the euro now, what do we need to look out for? Thank you. What do we need to look out for when you trade the euro? Right now, are we supposed to be buying the euro or we're supposed to be selling the euro? Right now, fundamentally, medium to long term wise, the euro is bearish, weak. Maybe not as weak as the US dollar. Reason being, the market expects big, about 4 interest rate cuts from the Federal Reserve. So, of course, it's not as bearish as the US dollar right now, but it's also bearish. The central bank is cutting interest rates. They did yesterday. Although, markets expect at a slower pace. Right. The last time they cut interest was probably in June, I guess, around that time. That was the last time. And markets even expect that they will cut rate probably just once in a quarter. So now that we've had this, maybe one more before the year runs out. Where, on the other hand, markets are expecting the US Federal Reserve to cut interest rate about 4 times before the year runs out, starting from maybe next week, I guess. So, of course, you expect that even though it's bearish, not as much as the US dollar, and the euro would gain in value against the US dollar when you look at it over time. But against currencies like the Japanese yen, where their own central bank had increased interest rates just 2, 3 meetings ago, right? They're still expected to increase, maybe not now, but they're expected to increase interest rates. You expect the euro to lose value or fall or be bearish against the likes of the Japanese yen, right? When we cross over to the chart as well, let's just do that very quickly. We'll see how the euro has been reacting, right, across some of the other major currencies. We're going to look at it from right now. We've crossed over to the chart. Right now, this is the euro currency pair against the Swiss franc CHF, euro CHF, and you've noticed that right from the third quarter, really, right from the top of July, from early July, we've had the currency fall heavily, right, since then, literally. It's been a one-way traffic, literally, just a little pullback around early August, but we've had that downside quite clearly. From early July, I think thereabout, this was early July, beginning of July, we've had the currency fall, euro fall against CHF very quite clearly. And when we had the pullback, it was, I think, half of it, about 50% thereabout, okay, maybe about 50, about 61% pullback we had, right? And then it continued low as well. That means that knowing this, right, knowing what we know now, you could have been in line trying to sell this particular currency pair in many occasions right from the last 3 months, right? You look at euro versus the British pound. Now, this one has been a bit of a choppy one because the UK has also suffered quite similar as well, right? I mean, we had negative side, we had upside from the beginning to the end right here on my screen. You notice that we remain in one spot, very wide swing. So I'll say this has been a more neutral pair, barring August when we had major ups and downs. But look at euro versus AUD, for example, right? It's been also another neutral trend that we've had in recent time too as well, right? But I love it against JPY. So like I said, when I say weak, it's not against everybody. It's been weak against CHF. It's been very weak against JPY. And this is not just peculiar to the euro. I mean, the euro has been weak against literally, the JPY has been strong against literally everybody, right? But of course, when you look at the weakness in the euro and you pair it to the strength in the Japanese yen, that is why this pair has been one-way traffic downwards right from early in the month of July. Right, so that hasn't really changed. Of course, you have to consider that we're now trading at the bottom, a very interesting major area of support right now, going back to, August, early August, thereabouts. Of course, we expect some pullback. That's only natural. That when pairs or assets fall this way, you expect at some point we get some pullback before a continuation lower currently in line with the current bias. But of course, the bias does not change. Right, you look at euro versus, let's say, the CAD, right? So you can see, we've really been in a recent range. So against the euro, against the CAD, it's been in a range. Against the Australian dollar, it's been in a recent range. Against the New Zealand dollar as well. Also, well, I wouldn't like to say this is just a pure downtrend, right? Because from July, where's July? Beginning of July, price went up. Later in August, price came down. So at the end of the day, it's been a choppy one again. So against the major commodity currencies, I'm just going to say it's been more of a neutral one, against the likes of CAD, against the likes of AUD, against the likes of NZD. But against the US dollar, it's been stronger. Don't forget I mentioned that the dollar is more bearish than the euro. So, of course, you can look at Euro USD. That has been moving up since early July as well, clearly upside. And this is where I talked about the inverse relationship between the Euro USD currency pair and the dollar index. I think I mentioned that, right? That when the Euro USD currency pair is moving higher, the dollar index is moving lower. Look at this. This is Euro USD. It's been going up since early July, right? Look at the dollar index. It's been going down since early July. So the same way we've had this moving downwards is the same way we've had Euro USD moving upwards. So when you're trying to trade Euro USD, you could also look at the dollar index as part of your analysis, as part of the things that you consider before you jump in to buy or you jump in to sell. I hope that makes sense. I hope we're getting something from this. Now, of course, against the British pound, we've seen it's also neutral here, right? And then we mentioned the card as well, also in that space, is mostly bullish against the USD, bearish against the JPY, right? And the CHF, but neutral against mostly CAD, AUD, and so when I say weak bearish, there's a reason for that. Now that we have this quiet view or this overview, it does not mean that tomorrow you must jump into sell the euro against JPY. You have to consider the daily sentiment that will help you with timing. You have to consider your technical analysis, which will help you with entries. And you also have to consider, where we are in terms of the circle of the movement that we have. But of course, overall, we have that weak bearish bias for the Eurozone. So now, going forward, what do I have to consider before I look to buy the euro or sell the euro? What are the bullish biases that I should look out for? Or what are the bearish biases that I should look out for? And I just put a few things here very quickly for us to just run through so that we have an idea of what to look out for going forward when we're trying to trade the euro on the medium term. One of the things that you want to look out for is sentiment. One of the things that you want to look out for is sentiment. Of course, because the euro is a high beta currency in that sense. Now, of course, not as high in terms of the beta as AUD and NZD, but it also has that characteristic. So that means that whatever happens with sentiment going forward, if sentiment improves massively, we expect euro to also appreciate. That would be a bullish bias, right? Example, I think it was 2 days ago when we had, tech stocks jump higher as a result of Nvidia's upside, massive, right? That in itself, something like that has a positive influence on something like the euro against the US dollar. You have that kind of thing. Right. Going forward, if we have better sentiment as it relates to, the Chinese economy or as it relates to the geopolitical development between Israel and Hamas or Russia and Ukraine, all of that have positive developments for the euro. Also, if we also have on the monetary policy side, we also have reluctance by the European Central Bank to cut interest rates. They are not looking to cut interest. They're not willing to cut interest rate. They're not as excited about cutting it as fast as the market is thinking or expecting. Right now, the market is expecting the European Central Bank to cut interest rates one more time before the year runs out. That's one in the last quarter of the year. But if the central bank representative, the speakers are more like they're not looking to cut rates anymore this year, maybe till next year. All of these things are positive developments for the euro. You expect the euro to appreciate on the back of something like that. Or factors that influence the dollar negatively. If we have the Federal Reserve likely to cut rates by up to 4 times, or even by 0.5% in one of their meetings before the year runs out, that would also support a pair like Euro USD. So these are some factors you want to look out for, some bullish factors you want to look out for in pairs like the Euro, in currencies like the Euro. And if you're going to buy the Euro, it's best to buy it against the likes of the dollar, most importantly, because of the, bearishness of the dollar in that sense. But what about the bearish bias? It's just the opposite. When you have negative sentiment, poor economic data, negative market sentiment, that's risk sentiment, across the markets. It could be relating to the Eurozone, it may not be. But when you have that as well, that in itself would affect the Euro negatively. Not just that, don't forget we also mentioned that the central bank, that's the ECB, is a major, major driver or major influence on the currency. So, of course, anything that happens with the European Central Bank would also have its own role to play. I hope this makes sense, right? The European Central Bank here in this case, if we have situations where they're now more eager to cut rates, let's say we have the economic data in the Eurozone get worse, right? German data, for example, Italian data, French data, gets worse off. The Eurozone data in general gets worse off. And then, the central bank is now more eager to cut rates, right? Looking more to cut rates, looking to cut rate more than once before the year runs out, or once this year and very early next year. That in itself would also be a bearish or negative bias for the euro. I hope this makes sense. So at the end of the day, if you're going to trade a currency, any currency at all, any asset, it's important that you also know quite fairly, the different factors that influence such currency, such assets, and you're better able to make decisions based on that. I hope we're on the same page. I hope we understand. And I believe that, from what we have done over the last 1 hour, we have learned one or two things about trading the euro. Right. At this point, I quickly want to take some questions very quickly, and then we can stay within the time limits that we have. So, very quickly, if you have questions for me, kindly, based on what we've done today, kindly send it to me in the Q&A section, and I'll get into it right away. So, I have some already waiting for me, and I would thank you very much. Perfect. Thank you, Mesosa, for correcting me on this, right? Brexit was in 2020. Because I remember that it was, I confused COVID-19. So it was during COVID heavily that we had the whole Brexit drama. Fantastic. Right. So we had that, not 2019. It took effect mostly. Of course, we've had the negotiations, we've had all the, talks, all the agreements, all of that pre-2020. But yes, thank you for confirming this for me. It took effect February of 2020. Thank you very much for that. Thank you. Um, please repeat the explanation on the weighting or correlation between Euro USD and, well, I wouldn't say USD Euro because the pair you're going to trade or the tradable pair that you have is arranged as Euro first before USD. Now, I believe you're talking about the dollar index. The dollar index is spelled USD index, INDEX. It's also a tradable asset on our platform, and it has an inverse relationship with the currency pair Euro USD. That is, when you have Euro USD as a pair move higher, you expect the dollar index to move lower. And the reason why this influence is big is because the euro weights heavily, most heavily in the index. So, it's the index is measuring the dollar against the euro, the dollar against the yen, the dollar against some other currencies. I think the Swedish krona and some other currencies there as well, right? The euro has the biggest weight, about 57% of it. So, of course, whatever happens with the euro affects the currency in that sense, right? So, there's an inverse relationship between euro USD and the dollar index, all right? The terms bullish and hawkish mean the same thing. Also, bearish and dovish, do they mean the same thing? Well, not exactly. Bullish and bearish are used to describe the trajectory of movement in a financial asset. That is how prices are moving. When prices are moving higher, when prices are expected to move higher, when traders are positive about a particular currency or asset, we say we are bullish. So bullish signifies upward movement of a particular asset. Bearish signifies downward movement of a particular asset. Bearish signifies downward pressure, negative bias towards a particular asset. Now, hawkish and dovish, on the other hand, are used to describe central banks and their policy direction. So they're two different things. Hawkish and dovish are used to describe central banks and their policy direction. And in very simple terms, when the central bank's policies are designed to be tight, designed to mop up money in the economy, increase interest rates, we can describe them as hawkish. Now, hawkish can make the currency bullish. Does that make sense? Hawkish can make a currency bullish, but the currency is bullish does not always mean it is because of the central bank's hawkishness. That plays a big role, but it's not always a factor. Dovish is the other side. It's used to describe when the central bank's policies are designed to be loose, designed to cut interest rates, pumping money into the economy, reduce, the reserve ratio, just whatever the case is, just make sure there's more money flowing in the economy. Usually this is done when the economy is suffering or has suffered a very big hit. Now, dovish is a negative for the currency. So that means that when the central bank turns dovish, the currency can become bearish. Right? The currency not even will most likely become bearish. So there's that. Bullish and bearish are upside for currency or asset, downside for currency or asset. Hawkish is tighter monetary policy. Dovish is looser monetary policy. I hope that makes sense. I have to pick it up a bit because of our time. How can you assess the USD index for decision on Euro USD pair? It is on the trading platform where you have your quotes, just the way you have Euro USD and every other currency pair. Just check through. You also see the dollar index right there somewhere. Can one trade the euro alone? That is there a euro index to trade? If yes, how do we trade them on the HFM MT4? Now, when you trade currencies in pairs. It is always one currency against another currency. So you cannot trade the euro alone. If you even look at the index, let's pick the dollar index as an example, which is the only index that we have, right, in terms of a single currency index. But it's not just looking at the dollar alone. It's looking at the dollar against the euro, against the yen, against the, some other currencies too. So you cannot trade currencies alone. So that answers the first part of the question. Now, the second part of the question is, do we have the euro index? No, we don't have the euro index. What we have as an index is the dollar index. We can trade the euro against the likes of South African rand, the Japanese yen, the Swiss franc, the US dollar, the British pound, the Australian dollar, the Canadian dollar, and so on and so forth. All right. This one says, please, do you host the foundation classes virtually? Yes, we do. Sorry, I forgot to mention that. 3 p.m. it's online. So when you open an account, speak to your account managers, you can get the link for the classes and they can send them to you. 3 p.m. Mondays to Wednesdays, just like what we have right now, is when the foundation classes run. All right. Yeah, I saw this question earlier. Thank you for reminding me. Mr. David says, do market fluctuations have laws that guide its behavior, can you teach the Elliott wave principle? Now, we can't do that in this particular webinar, but we'll also consider that as part of our upcoming webinars and see how we can discuss it in the classes, right? Of course, market fluctuations have guiding principles around them, right? Some principle. I don't want to go into that today, but of course, we'll consider this and impute or find the time to deal with this as well in one of our webinars. Is that okay? All right. This one says, very quickly, we don't have a lot of time. I'm just trying to be very. I've answered this already. Where is the foundation class going to take place? It takes place online, like this, 3 p.m. 3 p.m. So you can ask your commander for the link, and then you can join that as well. You said that countries in the Eurozone also have their individual authority. So what is the ECB part? What is the part of the ECB in this? Where is it located? How is it constituted? When I say authority, I mean fiscal authorities. That is, they have their own government. Germany has a different government. What's it called? France has its own government. All of them, they have their own government, their own fiscal policy authority. Where you talk about taxes, government spending, they have their individual authorities in that sense. But when it comes to monetary policies, they have a singular monetary authority, which is European Central Bank. Now, it now has branches in all the countries. So there is a branch in, Germany. So we have the German Central Bank, which is a part of the European Central Bank. We have a French or France Central Bank, which is a part of the European Central Bank. So that's how you look at it, as different parts of the whole body. So the European Central Bank is the major and only monetary policy authority in the Eurozone. I hope that makes sense. We do not have the Euro index on the platform. All right. Thank you, sir, for the insights. Now you're clear on how the ECB's stalling cutting interest rates will affect the euro. But the EU is too slow. Well, we won't really look at it as too slow. Every country, adjusts policy or should adjust policies as best as it fits them. You can't say because the US is cutting interest rate at a faster rate or are expected to cut interest rates at a faster rate, Europe should do the same thing. Remember that Europe has to consider their own economic performance, their own individual countries. All those things have to play. Right now, Japan is expected to start increasing interest rates. We can't look at it and say, oh, because the US is cutting interest rates, Japan should also do the same thing. No, they have to consider their own individual inflation situation, economic situation, and so on and so forth. So our job as traders is to understand where they are in their interest rate circle and apply that to our trading. I hope that makes sense. Thank you, Stephen. All right, this one says, we don't have all the time. We don't have all the time. We don't have all the time. I'll just take one more. Please, for the questions I cannot take right now, I'm going to send the link to my chat so that we can also, send me a question or whatever it is that you feel like I'm not able to attend to right now. I will look into all of them and attend to all of them. Is that okay? All right. This one, let me just pick one more. Let me see. I'm seeing one. Okay. How does the Chinese economy and geopolitics of Israel and Iran affect the euro? All right, thank you. Now, we look at this more from the angle of sentiment. The Chinese economy is a major part of the global economy and it affects sentiment a whole lot. When Chinese economy is doing much better, that's a good thing for investors. That's a good thing for global trade. That improves market sentiment. And euro, as a high beta currency, tends to appreciate under this condition. When Chinese economy is suffering, that's a negative for global sentiment. That's a negative for global trade, a negative for the global economy. that affects the euro negatively because the euro is a risk asset. So of course it loses value under negative conditions in the market. The same thing goes with Iran and Israel as well, right? The more it escalates, the more we have energy insecurity, the more it affects energy dependent regions like Europe, right? So of course, when you have the story escalating, getting worse, it affects the currency negatively. And when there's improvement, signing of deals, ceasefires being mentioned, that affects it positively. I hope that makes sense. So, and there's so many more questions on and on. We don't have the time to attend to all of them, but we'll do that as well shortly after this. Just send me the questions in the link to my chat, and I'm going to attend to all of it. Now, for those of us that are asking the link to my chat, now please just check. I'm going to send it now in the Q&A section. I'm going to send it now in the Q&A section. Sorry, in the chat section of the meeting, right? So just if you hit the chat button, you'll see it now. All right, I'm typing it there. Please send in your questions and inquiries. Sorry, put the link there. You can click on the link and send me a message. I would attend to. So for questions I'm not able to attend to right now, I would attend to all of them in due time. Just send it to me with the link that I have sent. All right. Thank you very much for everybody. I need to wrap up the recording right now. Thank you very much to everybody that have joined. Do take care. Thank you so much for joining us, and I'll catch you in the next one.